Hello folk, this is John Cato, 30-minute trading. Just thought I'd give you a quick little video here to remind you that it's better to keep your MetaTrader platform running more permanently, because then you'll get the signals coming through on the alert feed and it won't get distorted by delays in type prices coming through from the data stream. You can get difficulties if you start it up just before you expect to trade, in the sense that you will get false alerts effectively because the data stream hasn't had a chance to settle down. Here's some alerts that have been coming through today, just recently, just before I made this video. And you can see here I've just loaded oil again, just to show you a blank screen. You can see it came up with alerts just there at 13:15. And you can see the alert that was made here. If I bring the crosshairs over, that was the most recent alert. If I show you on indicators what you can do with that, on S-Trader, for example, you can say show on chart, and that might be very useful for you, and you might want to have cover alerts. So if I click on OK now and say that, it shows it on the chart for you, as well as having the alert. And if I bring those alerts back up to the top here, you can see the most recent alert there. So that's a very bullish entry point. You can see it's gone up, it's pulled back, and we've got a bullish entry point. So if you were trading that, then you might well be considering to take that. The only thing you'd have to decide is whether you have it on the close, and therefore the open of the next candle, or whether you have it on the breakout. And that's just a decision you have to make. In this case, we might have it on the breakout, in which case we'd be looking for a trade up in that direction. And then all we have to do is take this and take the stop, 75.93, and we put that on here somewhere. We've got a new candle now, so we've got another point, 75.93. So that would be your stop, because it's back on that Darvas line. So you could have it on the candle instead if you preferred. And if I come back to that alert we were just looking at, see if I can find it. We've had a number trigger off just now, as you can see. And we might want to say target of, I don't know, what should we say? Target of T4, 77.61. And all you do then is put another line on the screen there. 77.61. So you can visualize it by doing that. And obviously that's a bit far away. But that might be what you might want to do, okay? So that would be your target price. That would give you a good risk reward. But you might decide that you want something a bit tighter than that. So come back again to the data we've got here. And we might say we want to go simply for T2 maybe, 77.24. So 77.24. So that would be your other. Now that would be interesting. So T2 would be effectively be a resistance level. So you might decide to go for that resistance. The point is, you are the trader. You decide. Or you might decide to put the stop up to here. So you're going to target that as being the stop. You decide what you want to do. You decide how you're going to trade it. That would obviously change the stop. The volume tightened up would give you a different stop volume. So instead of buying one, you might be buying two. That comes down to the risk reward settings you've got on your system. If we come back up here, we've got some more oil trades there. All right, we've got an M trader alert, as we can see off of this candle there. That would be an M trader alert there. And again, we can go to the indicators, M trader, we can say that we want to show on the chart, which we've already got, and we might want to have, instead of wick prudent, we might want aggressive, and we might want aggressive on the candle or the support and resistance or the ATR. Keeping it simple is support and resistance, so that would be there. And that would give you a trade on US oil here. And that would be saying buy 2 at 76.95 with a stop at 76.34. And you can adjust that objects list. I think it's that one, 76.34. So I do recommend you get used to MetaTrader so that you can actually do this sort of thing quite swiftly. Or you can simply eyeball it, knowing where you've set it up. In this case, we've got with this new trade alert, our T2 is 77.27 in this case. So let's go to the objects there and pick up the one that I think was the last one we put on there. And we got here 77.27. All right, just like that. And now the target has moved up to there. You can see we're reversing, so actually all of this action is taking place, if you like, within that range. So you can see that we've got this kind of setup going on here. We've broken out above that Darvas. That was a Darvas break, and actually if we'd been trading that, we might have taken the M trader trade alert out of there. Now we're within all of it. So instead of being a breakout, it's now a retracement pullback and a potential trade out of it again. And if you take this structure, then you might say, well, it would be realistic to have a target there, which would be the T4 target. Anyway, enough said, my friends. Let you think about that if you want. Get back to me anytime. John Cato, 30 Minute Trading.